People, I'm gonna try to explain the difference between hedging and martingale, as it seems to be still unclear for many of you, and I believe that many of the 95% of you losers. No offense, I'm not trying to be rude here, just pointing the obvious. 5% of people win in this game, Forex trading, 95% lose. I think this ratio, this percentage will never change um, because it didn't change so far. So I don't see it changing anytime soon. Besides, if it will change, well, we cannot have only winners, can we? Now let's go back to the martingale. I had a very strange discussion and left some bad taste in my mouth, let's say, on Reddit. Reddit is a very, the Reddit website, reddit.com. Reddit is a very stupid site because, well, it allows anyone to register and comment and post links and any stupid ideas there without even asking for the members' emails. So that's why it's full of trolls and idiots. Not all of them, of course, I don't want to generalize, but many trolls there. So people there were trying to convince me that I was actually martingaling, not hedging, and I was trying to explain them the difference between hedging and martingale, and without any luck, of course. Eventually, I've been banned from that site, and the other, let's call them traders, the 95% of the traders out there were actually lucky about this and sending me mean comments like, I hope you enjoy your ban or stuff like that. Childish things. I didn't get this. I could open another account. As I said, Reddit doesn't even need an email address. But what's the point? Once born a moron, probably one will die as a moron, and nothing can change this. Now, let's talk about martingale first. Martingale, basically, it means betting on the same side of the coin over and over again, hoping that the luck will change, it will turn, and you will eventually win. What does it mean? Sell. Let's say I start to sell here, okay? I'm assuming that I'm hoping that the price will go down, and I'm selling here, right, $1 lot. I'm gonna get rid of this moving averages for now. We don't need them. Okay, so I'm selling here. I'm martingale, so I'm not using a stop loss. Both of these martingale and hedging, they don't use stop losses, the classic stop loss. The difference is the martingale will eventually lose your money, your account, but the hedging will not. Now back to martingale. So I'm selling here hoping that the price will go down. Instead, the price goes obviously up. What will I do next? Instead of hedging, or even a little better than martingale, it's using a normal stop loss, I, as a martingale trader, will open another sell, let's say here, because I'm thinking now the price will start to move down. I'm hoping again. Meanwhile, let's make this a channel, so don't draw too many lines. Same kind, it's confusing. Well, something like this. You can find the middle of this line. Like this. So I'm selling again. This is martingale. Again, martingale is when you bet on the same side of the coin again and again. This time I'm selling $2. Hoping to recover the previous loss and maybe make some more. Again, it doesn't happen. The price continues to rise. I open the third position, sell again here because I think maybe the price now will start to move down finally, and I will recover my loss from the previous two obviously failed sales, and this one will be, let's say, $4. Now it depends on the martingale trader. Some are doubling, some are increasing, some are tripling. Let's say this example, the trader will double. Of course, it doesn't happen. The price continues to rise, and so on. I have a minus, 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 and I'm betting against the trend like an idiot, martingaling and hoping that martingale is. I'm not sure if that's a verb. Anyway, hoping that the price will eventually turn and drop, and my last sell position will cover all of the others. That's why doubling the bet every time. So I don't know. I will reach maybe some point. I will have a sell of I don't know, $50. Keep increasing like this, and the price will still not go down. Still goes up. Eventually, my margin will get hit, and I will lose all the money. That is martingale. So I'm trying to make this as clear as possible. This is martingale. Double the bet on the same side of the coin. Ignore the trend, just bet on the same side of the coin, and double the bet every time. Eventually, you will reach your equity and margin, and you will lose. Obviously, you will lose. Now, what is hedging, and why is it so hard for some of you to see the difference? I really don't know, but I hope maybe I will make it clear for you now in this video, and you will understand. Let's start from the same point. I'm not martingaling now, I'm hedging. Great. So you all know. Start from the same point, the same mistake. I'm selling here. $1. Well, maybe not exactly. Here, this is just an example. Let's say I start to sell here. I hope the price will go down, and this is it. Because this is what I think. Let's say I'm thinking this is some kind of, I don't know, resistance, right? I don't know why it's so black. So thinking that this line is a resistance, I'm selling here. I see the prices, or here better, I see the prices being rejected from the resistance line. That's why, by the way, I never trust the resistance lines. Well, not that this is a very good one, but anyway. Now, what happens next? Some of you like to use a stop loss. Well, if you use a regular stop loss and you think like this, let's consider this a resistance line, or the previous high, this one here, coincides with the resistance line. You will probably set your stop loss somewhere at this level. And what will happen? Your stop loss will get hit right here, and you have lost I don't know, 70 pips, right? That is your stop loss. Using a stop loss, you just lost 70 pips. Now that's regular trading. Hedge trading instead, it doesn't use a stop loss. instead of using a stop loss. And this is what exactly the RobotFX Fluid Expert Advisor does. Instead of using a stop loss, it calculates, it detects the trend. In this case, we have a trend up starting. It's a clear channel up with the US dollar, Canadian dollar resumed its up movement, its uptrend. Where is it? And the expert advisor can detect that. And instead of using a stop loss, it will open an opposite order, a buy order, at a distance that you can choose. So instead of, let's say, using a stop loss here, 50 pips away, come on, you line, you will open a buy. And you will use a lot size slightly higher, or let's say double. Let's use like a martingale example. Maybe this is where the confusion. You can use a lot size bigger than the sell when you buy. This will be a pending order. Instead of setting a stop loss, set a pending order. And let's say you double the lot size of the pending order. Now when the price will hit this buy, with this pending order, obviously it will open a buy and then it will resume up. Well, if it goes up, I have no worries. The buy size, the lot size of the buy order, the long order, it's much bigger, in this case double than the lot size of the sell order. So if the price goes up, the profit will increase. From here to here it's been negative 50, 60 pips. So I had a negative profit. But once this buy order opens and the price goes higher now, well, the profit will slowly increase. It's just mathematics. I really don't understand why some of you don't. Not only that they don't get it, but they arguing that this is either martingale or this is the same as using a stop loss. This is neither of those. Hedging is hedging. Hedging is what it requires you to be one of the 5%, I think, in my opinion. So eventually this order will close. Once the profit will at this point will be negative, just mathematics. Once it will go higher, the buy profit will be much higher, will increase much higher than the loss of the sell order will increase. So the positive of the income from the buy, the long order, will be in a short time will overcome the negative income from the sell order. So this order will close somewhere, maybe here, I don't know. I cannot calculate right now. I woke up with a headache this morning, I don't know why. So anyway, this is hedging. I don't know if it's clear for you now or if it's still unclear, but obviously buy, in this example, $2 minus $1 equals $1. That's a positive value. That means once the buy order is activated and the price moves a little higher, the loss of this sell order, it already starts to decrease. And as the price moves higher again, eventually it will reach break even, and at that point you can close the trades at break even, and therefore you didn't lose any money basically, right? And concentrate on opening another swing, another buy, because now you are sure you have a buy trend. You can see the channel, you can see the higher highs, higher lows, and concentrate on, after you close this break even, this basket at break even, probably somewhere here. If I just calculated by eyes, just looking at it, then you can open another buy here and start again with as much as you can afford to lose. Calculate your lot size, and here probably you want to buy again. You have this swing low, the trend is up. In other words, trade with the trend, buy in dips. This is a dip, by the way. So here you will start buying, and now you will have, again, we don't use a stop loss. You will have a pending order of uh, again, choose your distance, your distance in pips. Let's say you want to, if you lose a stop loss, you could have put it here under the channel. Let's say if the price will break the channel, uh, maybe it will drop and so on. Some people think like this. So instead of using a stop loss here, like you would normally use a pending sell. Again, the lot size a little bigger than the buy lot size. And wait to see what happens. Now you can go to sleep now, relax. If the price will go down and hit this buying, this pending sell order, and it will continue to drop down, your order will close at break even. Considering you are using the RobotFX Fluid Expert Advisor. If, however, let's say it will go down and then up again, then the expert advisor, or you manually, if you want, if you don't use an expert advisor and you hedge manually, you can open another buy as soon as you have the buy signal. Another dip, another swing. Make it a little higher. Now you are sure that the price will continue with this trend in this channel. If it will go back in the channel and resume its move, the price will resume its move up, the upside. So you can open another buy. And we make this a little, we calculate this so we have the lot size, the sum of the lot size for the buying orders will be slightly higher than the sell order. Consider when this became a sell now. So again, the price moves high. Eventually it will reach the point where the sum of all these three orders is zero. You can either leave it or close it at break even, so you can, I don't know, breathe, relaxed, and then concentrate, or opening another buy, starting with your normal lot size, what you usually normally trade. Follow the trend, buy in dips, exit once the trend once the swing high stops, then buy again here, and so on. Now if this isn't clear enough, I'm sorry to say that I cannot explain it any better. And if you can still see this as a martingale or as much worse when using a stop loss, then again, I'm sorry to say this, you should probably stop trading. Some people can do it, some people cannot do it. Obviously you cannot do it. My advice is open a demo account, try this approach, get rid of the stop loss, try this approach and try to master hedging. If you can do this, you will never lose again, that's guaranteed. This is it. I hope you understood finally, and maybe those people, those pseudo traders on Reddit, maybe they will watch this someday and understand this too. Otherwise, nobody, including me, cares. Actually, I'm happy with this percentage. I'm part of the 5%. From my point of view, I wish there only was 1% of winners and the others 99% to lose. This will increase my income, right? The more people lose, the more money the winners will make. There you go, I'm honest. Okay,